Hi traders, it's Amelia Bordeaux and I'm here with your global week ahead for June 4th, 2018. Now what I'm about to discuss is not a comprehensive list of what's happening next week, but it is a list of the events that we think are most important to potentially move currencies. There's a big data and events week next week for both Australia and Canada, so let's have a look at Australia first. You can see a specific table of exactly what's expected and the previous month's result and compare them in the PDF of the week ahead that we supplied you, but I'm going to run through the numbers for Australia very quickly here. So the RBA has a policy rate announcement on Tuesday, June 5th, and that's the most important event for Australia this week, and we're looking for no change, but we also want to see how the statement is worded. That's very important. Prior to that though, on Monday, June 4th, we're going to get retail sales for Australia. Wednesday, June 6th, we're going to receive GDP and also the trade balance on Thursday, June 7th. So what does this mean for the Aussie dollar? Let's put all of these events into context. This is our proprietary foreign exchange positioning tracker. These are the G10 currencies against the base currency of the US dollar. And if we look here at the Australian dollar, the market has a small net long position in the Australian dollar. This chart is the current implied probability of a 25 basis point rate hike at the June RBA meeting, which is next week's meeting. You can see here that it's interesting, in late January, there was a partial rate hike priced in, and that just fell off, and it's already come all the way down to zero. So basically no chance of a rate hike is priced in by market participants for the June RBA meeting. And we'll let you know why that's important in a little bit. Before we look at the currency, however, we're going to look at one last indicator, and that is the economic surprise indicator for Australia. This indicator shows whether economic data for Australia as a whole on the aggregate has been beating expectations or disappointing, being below expectations. Let's look at the tracker. So right here is 0, and you can see that our current number in the surprise indicator is below 0. Negative 5.7 is the read on that. So as a whole, Australian data has been disappointing relative to market expectations. Let's take a look at the Australian dollar, which is charted right here for you. Now, just quickly in review, we know that the market has priced out any chance of a 25 basis point rate hike this week for the June RBA meeting. We looked at the economic surprise data index for Australia, and on the whole, it showed that data were disappointing market expectations, and that is in negative territory, that indicator. The market, remember, has a small net long position in Aussie dollar. So what does this mean? Combined, these indicators are telling us that the market is more bearish on the Australian dollar than we think it should be, than we are. So any topside surprise in the data this week could boost the Australian dollar. And if the RBA statement is more hawkish than the market expected, that could also boost the Australian dollar this week. So let's take a look at the levels seen here. So right here, this orange line is 76, the figure. Obviously the figures are big levels to break. And you can see in the pink, 76.10, that's the 50-day moving average. So we have significant resistance in Aussie dollar at 76 the figure, 76.10. So if it breaks topside, you know, we could really see Australian dollar take off. So let's talk about retail sales, our first indicator, which is on Monday for Australia. So the market's was expecting 0.3 month-on-month rise, but our proprietary index for that indicator is showing a little bit stronger, so 0.4% month-on-month rise. So you may want to be long Aussie dollar into that. You see here that we're trading around 75.69, 75.70 currently. So if you want to get long here, 75.70 level, if you buy around this level, you can take 50% off ahead of 76 the figure, and then add to the position on a possible break of that 76.10 level, that 50-day moving average. So once again, we're watching 76 the figure, 76.10. There's more data this week in the RBA meeting, and we can update you on levels, specifically on trades ahead of those data. Canada is also having a big week for its data. On Wednesday, June 6th, we get the PMI index, and on Friday, June 8th, importantly, we get the May employment data. So of the two indicators, the employment data on Friday have the ability to move the Canadian dollar the most. So let's just discuss that. So May employment is expected to rise 25,000 in Canada, and this is up from a slight decline in April. We need to watch the full-time and part-time job split. So most of the gains recently in Canada data in employment have been in the part-time sector. It's much better if the gains come in the full-time sector. So let's watch for that split. If they come in the full-time sector, that's even more beneficial for the Canadian dollar. Note that the month of May in employment in Canada has beaten expectations for 7 straight years. So that suggests that there could be an upside surprise to our already positive call for May employment in Canada. Let's put all of this in context. Let's look at some Canadian dollar charts. Once again, let's take a look at our proprietary foreign exchange position tracker. These are the G10 currencies against the US dollar. If we take a look at Canada here, the market participants are pretty much neutral in Canadian dollar. There is a very small net long position in Canada against the US dollar. This is the economic surprise indicator for Canadian data. Here is the zero line. And you can see we're below the zero line. So we're at -17 is the read. So Canadian data on the whole have been disappointing relative to expectations. It's time to look now at the Canadian dollar and talk about how we can trade it this week. As you can see here, we're a bit rangy in Canadian dollar. We're looking at a big level here at 128, the figure. You can see in the pink that 50-day moving average comes in at 128.16. So there's significant resistance around one spot 28.16, one spot 28, the figure. We're looking for a downside break of that, most likely on the employment data if they're stronger than expected. Now let's take a look in here in April when we did break downside that 128, the figure went through the 50, 100-day, 200-day moving average. It just plummeted right down. And you can see we reached a low of 125.53 here. So when it breaks at 128, the figure, it can really move. And that's the level we want to watch for this week. And we'll be updating you if we initiate a trade and levels into the PMI, the IV PMI, and the employment number. Let's take a look at now at EuroCAD. We're looking at EuroCAD. So when this line is going lower, Canadian dollar is getting stronger against the euro, and when it's going higher, the euro is getting stronger against the Canadian dollar. We see here that we're in a really nice downtrend of the Canadian dollar strengthening against the euro. Of course, euro is having some problems due to Italy, political risks, and that's weighing on the euro. So if you get any more negative Italy headlines this week, they'll impact the euro, and you can take a look at EuroCAD as well as an alternative to euro dollar, especially into the payroll report, the employment report on Friday for Canada. We're sitting at a big level here. This is 150, the figure on this. So that really needs to break. You know, we've broken once down here, and when it does, it's a significant level like the CAD. It goes through the 50-day, 100-day, 200-day moving averages. It just falls right below it. So once again, we'll be updating you if there's any negative news on Italy this week and ahead of the employment data for Canada, whether or not we initiate a trade for EuroCAD, but just keep your eye on that. 150 is really the significant level to break. Thanks for watching The Week Ahead, traders, and good luck this week. Trade well.